What's going on YouTube? It's your boy Dollar Mike and I'm back at it again with another video. A little bit of a return to form because I haven't posted a video in about a month. But I'm not going to waste your time with all that here. You know what we're talking about today from the title, and it'll be credit today. And in detail, just understanding your credit score to its fullest extent, because there are different ways that you can get a different credit score from different places. So we're going to explain all that in today's video. Let's not waste any more time. Let's get right into it. Let's go. So like I've mentioned before, we've talked about credit on the channel before and how to actually understand your credit score, what you can do to improve your credit score and things like that. The videos for that will be linked right up there, and if you're interested, definitely check those out if you're trying to generally just improve your credit score. Most of it's pretty basic stuff, but if you just need that information, the links to those videos are right up there. In this video in particular, we're talking more about how your credit score is actually calculated and where you can actually get the right calculation for your credit score. Because when your credit is pulled, it's not pulled on those typical apps that you may know of, such as Credit Karma. And that's a common misconception. But apps like Credit Karma do display a credit score, but it's not the end-all be-all credit score depending on what you're exactly doing with your credit. And that could come down to applying for a new apartment, getting a mortgage for a home, getting an auto loan, a student loan, a personal loan, whatever you may need. Those credit scores aren't going to be reflective of what Credit Karma displays to you as your credit score. For that, you're going to be using a FICO score, and Credit Karma doesn't use FICO scores. So I'm going to explain all that in today's video and also give you a little bit more detail. When I first started looking at my credit, taking everything more seriously, and trying to just understand my financial health better, I downloaded the Credit Karma app, and that was a great tool for me to use to go ahead and figure out what I thought my credit score was, or a rough estimate of it at least, and then make some steps to improve on what I can improve upon, pretty much paying my bills on time, paying off any outstanding debts and stuff like that. That's the basics of what you need to do to get a better credit score over time. But as I mentioned before, Credit Karma doesn't use the same credit scoring model to give you the score that typical lenders use. Credit Karma uses the Vantage score versus the FICO score, which is what most lenders actually use. And when they go and pull your credit, they're using FICO, not the Vantage score. So that's just the number one big tip, important to know. And if you already know that, that's great, but I still have more information for you in today's video, so stay locked in. Credit Karma in the past actually got in trouble for this, for pretty much just not displaying the information in a easy to understand way on their app when it came to people actually using those credit scores to go out and get loans, in particular for credit cards. People would go out and apply for a credit card and not actually be approved for the credit card. And they wouldn't be approved for the credit card because on Credit Karma, it would say that your credit score, I don't know, maybe it's 800, but in reality, your credit score might have been a 720, which is a 80-point difference. That's a pretty large difference and can definitely make a decision on you getting approved or denied for a particular credit card. So this happened to a lot of people, and the lawsuit was actually settled with Credit Karma last September for about $3 million. But that lawsuit was for falsely claiming that people were pre-approved for credit cards, but when they go and apply, they simply were not approved. Credit Karma has since revamped the app to, of course, avoid those lawsuits in the future, but it doesn't really change the past. Either way, they are better now, and Credit Karma is still a viable option for checking your credit score, just not your FICO credit score. But back to your credit score. There are two major credit scoring models in the credit industry right now, and that is the FICO and Vantage. But FICO, FICO is the industry leader and also the industry standard when it comes to using credit scoring models. That's what pretty much all the lenders use. Not every single one of them use the FICO scoring method, but most of them, if not, I would say 90%, don't quote me on that, but 90% roughly of the market uses the FICO scoring method when it comes to getting a loan for you, when it comes to, like I said before, a car, a home, a motorcycle, auto loan, personal loan, student loan, whatever. The other credit scoring model, as I mentioned before, is the Vantage score. Not as widely used, but it is picking up traction with a couple of institutions such as Chase and American Express, but it's not widely used as much as the FICO score, and you'll see more as I explain more in today's video. Currently, the Credit Karma app uses the VantageScore 3.0 system, which I said before is not the industry standard and of course not the industry leader. So when you go look at those scores on the Credit Karma app, it is not an accurate representation of what you may get in the real world when you go apply for those loans, as we talked about. But also something to note, that doesn't mean that the VantageScore model is a bad credit scoring model. It's just not the one that they're going to use when they go and pull your credit in the majority of cases. In the case of FICO, they have tons of different credit scoring models for you and tons of different credit scoring models that they use to go ahead and give you a credit score depending on what you are actually trying to do with your credit. Some of the models are based on the type of credit that you're actually applying for, and some of the other models are based on the credit bureau that's actually pulling your credit score. And if you don't know, there are 3 different credit bureaus, and they are TransUnion, Equifax, and Experian. All 3 of them use the FICO scoring model as well as the VantageScore model, but majority is always for the FICO, as that's the industry standard and industry leader right now. Now, like I mentioned before, FICO has different scoring models. They actually have about 7 or 8 different scoring models that they use for different things. So that's important for you to know, and we're going to go over all of them right here. Right now in 2023, the most common scoring model for the FICO scoring method is the FICO Score 8. They also have the FICO Score 2, 4, 5, 9, 10, and 10T. So like I said, we're going to go over all the differences. There's not that many differences, but it is important for you to know because you may be getting pulled for different things depending on what exactly it is that you're applying for. Before we jump into the first one, it's also important to understand that all of these FICO scoring models do not impact the other FICO scoring models. So that means just because the FICO Score 4 is higher than the FICO Score 2 number-wise, that the FICO Score 4 will replace the 2. But in reality, the 2, the 4, the 5, the 8, the 9, the 10, and the 10T are all used separately and can all be used separately for different ways to score and provide you with a credit score. So putting it out there, none of them replace another. There's not a newer version or anything like that that replaces the old version. It doesn't work like that. They could all be used for different things. Either way, let's talk about the FICO Score 2, 4, and 5. So FICO 2, 4, and 5 are most commonly used for mortgage lending. So what that means when you're going out to go and buy your first property, maybe you're buying an investment property, or maybe you're actually buying a home for yourself, they're most likely going to pull from the FICO 2, 4, or 5 model versus pulling from the 8, 9, 10, or 10T. That's just how it is. Don't know why that is exactly, but it's mainly focused on just that. So if you're trying to get mortgage lending, then you want to look at those scores before you go and apply for that mortgage loan to understand what your credit score actually is. And we'll talk about where you can see your credit scores, where you can see the 2, 4, and 5 and all that kind of stuff later in the video. So make sure you're locked in. But now you're probably thinking, well, if that's the case, then why do we need a 2, 4, and 5? Why can't we just have the 5 be the mortgage lending FICO scoring method? And that's because they pull from different credit bureaus. Those 3 credit bureaus that I mentioned before, they pull from different ones. So the FICO 2 score pulls from Experian, the FICO 4 score pulls from TransUnion, and the FICO 5 score pulls from Equifax. They all build their data from different credit bureaus. So whichever credit bureau is using your mortgage lender or anything like that, that's where they're going to pull from. So that's something you can ask. That's a question you can ask when you go out and try to apply for a mortgage. You can ask them who their lender is or whatever, and then ask them what scoring method they use, or you can look it up for yourself and figure out which scoring method they use. So then you can go and find out what your credit score is with that particular FICO score, and you'll be good to go and know exactly what your credit score is before you apply to make sure you get approved for that loan, that mortgage in that case. We're now on to the FICO 8, which I mentioned before is pretty much the most common and the industry standard for the majority of things right now in 2023. This is for your auto loans, your credit card, when you go apply for a credit card, and also your personal loans. So all that is covered with the FICO 8 scoring model or scoring method. So that's the most common. You'll see that on some of your banking apps that you may have. They might use the FICO 8 scoring method. I know the Bank of America app, you can view your FICO score for free, pretty much. If you just sign up and you just use Bank of America as your bank, you can see your FICO 8 score anytime you want for free and all that kind of good stuff. So there you go. That's for credit cards, personal loans, and auto loans. They're typically going to go off that FICO 8 score. So that's something to know if you're trying to go out and get a car, personal loan. You got the gist. The FICO 9 scoring model is just like the 8, but of course a little bit different. The FICO 9 credit scoring model factors in rental payments. So pretty much if you pay rent, like I'm paying rent right now in an apartment, if you pay rent, those rental payments can go or show up on your credit report. And pretty much if you're making on-time rental payments every single month, taking care of your bills, not getting any late payments or anything like that, then it should help out with your credit score. Now, if you're not doing that, then of course that would hurt your credit score. And that's for the FICO 9 model. The FICO 8 model doesn't do that. With the FICO 9 model also makes an impact when it comes to collections. Now, if you don't know what collections are, then I'm going to explain it to you, of course, but if you don't have them on your credit score or your credit report, you don't see them anywhere, then you're good to go. That's exactly where you want to be. You don't want any collections at all, ever. You receive collections on your credit report when you simply don't pay your loan back in the timely manner that was agreed upon, or just don't pay your loan or bills in full or off or anything like that at all. So if you don't pay your loans or your bills, then that lender or whatever may send you to collections. That usually takes a little bit of time. Once that happens, that's for sure going to impact your credit score for the negative in a bad way, and may be on your credit report for some time. I think it stays on there for a while. Don't quote me, but I think it's about 7 years. But like I said, don't quote me. I'll probably put this on the bottom of the screen, do my research on that, because I'm not entirely sure. Either way, you don't want collections there. The point is there. Don't do it. Pay your bills off, and you'll be good to go. But like I said, the FICO 9 scoring model does make a couple of changes when it comes to collections. The first change is that when you have a zero balance with a collection that's on your account, it won't negatively impact your credit score. So that means if you got a bill sent to collections, let's say for $1,000, you paid that bill off, then you should be all good when it comes to the FICO 9 scoring model, because it won't negatively impact your credit score. But if you still have a balance on there, then of course that's still going to negatively impact it. The other thing they changed, the second thing they changed with the collections on the FICO 9 scoring model, is pretty much the situation where different collections weigh differently on your credit score. So what do I mean by this? Typically, when people get something sent to collections, is for not paying back credit card debt, for not paying back medical debt, or for not paying back student loans. So in particular, when it comes to medical debt, it'll weigh a lot less than someone that's not paying back credit card debt or someone that's not paying back their student loans. For medical debt, things happen in life, and I don't know where my followers are right now, but if you live in America, you know how expensive it is to go to the hospital and get that hospital bill, and people don't pay those bills back. It might be $20,000, $30,000, maybe more, depending on what you actually got done, or if you even rode in the you even rode to the hospital instead of driving yourself to the hospital, which is insane. Point is, America's healthcare is really expensive, and people don't pay those bills back. So if you do that, it will impact your credit score a lot less from a medical collection versus a credit card or a student loan, where that's pretty much debt you kind of took out on your own, so you should be obligated to pay it back. Simply put, medical collections are less harsh when it comes to scoring your credit score and giving you a credit score. That simple. Past that, after the FICO 9, because that was a little bit, the FICO 10 and the FICO 10T. Now, there's not much here. This is, of course, the latest version. I believe it came out sometime either this year or late last year of 2022. And for that in particular, it really just goes off of trending data. I think it uses some type of algorithm and stuff like that to give you a credit score based on what exactly they think you're going to do with your credit going forward in the future. So it's a cool system. I think it's kind of cool, a predictive algorithm or some type of AI to predict your credit score for the future, to see how, or predict how you're going to spend your money and go into debt and come out of debt for the future. I think it's pretty cool. I don't really see too many lenders or businesses ever using this unless we get to that stage in life. But right now, like I said, FICO 8 is definitely the go-to model, and it'll probably be that way for some time. FICO 9 will probably take over FICO 8, but 10 and 10T is definitely a long way off. But pretty much a predictive and full comprehensive way to go ahead and score and give you a credit score, and that's what the FICO 10 and 10T pretty much does. Not major stuff. Like I said, I couldn't really find too much information on it. The only other thing I saw is that they'll look at your payment and debt history over the past 24 months and also take that into account. So they're looking at previous history to give you a prediction of what your credit score is now, and also a prediction of what your credit score could be in the future, depending on how you spend your money over the past 2 years. Really interesting stuff. Like I said, pretty cool. Probably, I don't think it'll be used anytime soon or really at all for some time, so it's nothing to worry about there. But I think it is cool just to know about these different types of scoring methods when it comes to your FICO score. And yeah, now if you would like to view all of your different credit scores, then of course there's a couple of places you can check out, because everything's kind of sporadic. There's not a end all be all one single place. But as far as FICO scores there is, for the VantageScore, I would say just use the Credit Karma app. You can view at least 2 of them on there. I believe TransUnion and Equifax on there, and then you can just download the Experian app and see your FICO score for free that way. So for VantageScore, it's pretty easy. For your FICO score, it's a very easy way to do it with the My FICO app, but you have to pay for that to see all the different FICO scores that I mentioned in today's video, not just the 8, where you can see generally everywhere. You have to see the 2, the 4, the 5, the 9, the 10, the 10T. You can get it all on the FICO app, but on that app, you do have to pay a monthly fee to see your scores every single month. I don't really think that's that necessary, but I do plan on making a video to pretty much provide the information of whether it's necessary or not. So I'll spend the money so we can see what that looks like. And if you're interested in something like that, then definitely just let me know down in the comment section below. We'll find out all the credit scores that I have under my different FICO, I guess, scoring method or whatever you want to call it. So like I said, if you want to see that, let me know down below. Just type in see my credit scores. Quote, see my credit scores. And we'll find out what the credit scores is, whether the My FICO app is actually worth it, and we'll go from there. But either way, there are other ways to see your credit scores, like I mentioned before. For the Vantage, you can see them for free on the Credit Karma app. You can also see them on some financial institution apps like Chase and American Express. They both use Vantage scoring methods now, which is pretty cool to see on the app. You can see all that for free. You can also use the Credit Sesame app, as well as go onto NerdWallet, which is a website, a very nice website. If you've guys never heard of NerdWallet, you need to be on there, especially if you're just trying to be into personal finance. It's the place to be. Come on now. But yeah, so it's tons of different places to find it. If you're looking for your Vantage score, FICO, I think the best place is just to download My FICO app. Like I said, you have to pay, and I'll do that for you on my behalf, and we'll do a review and find out if it's really worth it. If you need any other personal finance information, or if you're looking for it, definitely just let me know down in the comment section below. My name is Dollar Mike, and I've been making personal finance content on YouTube for a little bit of time now. So if you're interested in credit cards, credit scores, investing, saving, budgeting, anything personal finance related, I got you covered right here on the channel. Make sure you just browse to your heart's content, and I'll catch you guys in the next video. And Oslo, wow, Oslo, we going through it today. One take. Also, drop a like. I would really appreciate it. It's probably one of the best things you can do. That's all I really ask for. You drop a like on the video, comment, let me know that you liked it. Thank you. I can't really say much more than that, but thank you. I'll catch you guys in the next one. Take care of yourselves. Stay safe. Stay positive. Stay hydrated. I'm out. Dollar Mike. Peace.